Welcome, ladies and gentlemen, to our next panel session of the day, which will revolve around the crucial topic of sustainability, or more precisely, the digital economy, the cornerstone of sustainable development. With us for this session in the moderator seat, allow me to introduce to you Roberto Benetello, Executive Director, Business Council for Sustainable Development Malaysia, Berhad. And I'll leave it to him to have the honor of introducing our esteemed panelists. Over to you.
Good afternoon, ladies and gentlemen, and welcome to another exciting panel discussion of Malaysia Tech Month by MDEC. This is day 2 of the opening event, Malaysia, the Heart of Digital Asia. My name is Roberto Benetello, and I will be moderating this session for today. I am the Executive Director of the Business Council for Sustainable Development, Malaysia, BCSD Malaysia Berhad. We are a non-profit organization formed by a group of forward-thinking companies committed to creating a sustainable future for business, society, and the environment. We help embed sustainability into core business strategy and operations to create a competitive advantage for our members. BCSD Malaysia is a global network partner of the World Business Council for Sustainable Development, also known as WBCSD, the leading corporate sustainability organization worldwide. The title of the panel discussion today is Digital Economy, the Cornerstone of Sustainable Development. And today we're going to talk about technology, digitalization, but in the context of sustainability and climate change challenges. Ladies and gentlemen, 10 years ago, WBCSD, the World Business Council, developed a landmark document called Vision 2050. Last year, after 10 years, this vision went through a full revamping exercise. The revamping was necessary, absolutely, because many new factors and trends have come into the scene compared to 10 years ago. And we had to come to terms with the fact that the necessary change to realize our vision was not and is not happening at the speed or scale that is required. Furthermore, as you know, the disruption of the COVID-19 pandemic has exposed deep vulnerabilities in our societies. So Vision 2050, Time to Transform, that's the tagline, sets a shared vision for a world in which 9.5 billion people are able to live well and within the planetary boundaries by mid-century, by 2050. And 9.5 billion people is the projected population in 2050, moving from roughly 7.7 billion right now. So to achieve this vision, it's a difficult task. We need transformation at scale. And business and policymakers need to focus their actions to lead the system transformations that are needed. This, ladies and gentlemen, is far from being an easy task. In fact, the achievement of Vision 2050 requires transformations that need to happen to such a magnitude and speed that we've never seen anything like that before. Making these transformations happen fully and quickly enough, it's the real challenge that we are facing. So we cannot transform our businesses, economies, and societies without understanding what transformation truly means and what it involves. Transformation tackles problems at the root cause level with completely new ways of thinking and acting. On one side, there are, as we know, macro trends and innovations that affect the current systems. And then there are important enablers that make the transformations possible. Some of these important enablers of transformation include, for example, the shift from shareholder capitalism, a shareholder economy, to a stakeholder capitalism, which pays attention to a much wider audience and metrics. Hence the move from a short-term orientation to a long-term vision and new measures of success. Enablers of transformation include policies and regulations that are consistent with the right level of ambition and alignment. Again, transformation enablers include a better understanding of sustainability issues and their systemic nature, including the so-called ESG-related risks that have become so critical for business these days. Enablers include good quality science-based information that can guide decision-making, which is sometimes lacking. Another essential transformation enabler is a financial system that offers incentive to investments needed to transform, and that takes into account the true environmental and social costs. We will talk about this. Today. And last but not least, enabling technologies and digitalization. We must put the new technologies and digitalization to the service of transformation. In other words, use new technologies and digitalization to achieve the sustainable development goals and derive business opportunities from that if possible. This should be possible, it is possible, and it's highly desirable. So, ladies and gentlemen, today we have three distinguished panelists with us. They are Smita Kuriakose. She is a senior economist and acting country manager at the World Bank Group here in Malaysia. We have Mark McKenzie, is a senior analyst at the Southeast Asian Central Bank Center, SEACEN. And we have Dr. Peter J. Morgan, is a senior consulting economist and vice chair for research at the Asia Development Bank Institute, ADBI. I will introduce them in more detail one by one, starting by reading their short biodata, and I will ask them individually an opening question. We will then move to the other questions and hopefully to a fruitful and enriching discussion, which should last approximately 45 minutes. So without further ado, let's start by introducing the first panelist of today. So Smita Kuriakose, I hope to pronounce it correctly. She's a senior economist and acting country manager at the World Bank here in Malaysia. And her area of expertise is finance, competitiveness, and innovation. She is currently also serving as the acting country manager for the World Bank Inclusive Growth and Sustainable Finance Hub. Her expertise is in innovation, private sector development, science, technology and innovation policy, skills development, business environment, and competitiveness. Her work has covered over 20 countries. She has led regional flagship publications in Europe, Central Asia, East Asia and Pacific and African regions on both development policy and investment policy instruments. Welcome, Smita. And the first question is for you. We start immediately with a question, and it's about policy and sustainable development. So how can policy be used to leverage the digitalization wave to develop more sustainable business? So policy and sustainable business, and how can digitalization be leveraged in that process? Over to you, Smita.
Thank you so much, Roberto. And it's a real pleasure to be here at this panel with you and other esteemed panelists. So just to go straight into your question, when you're talking about sustainability and digitization, it's a multidimensional and a complex agenda, especially now with technology leapfrogging during the pandemic. We are seeing several trends and also several opportunities for climate integration. Just to give a few examples, when you're looking at digital services and e-commerce, something that has really thrived during the pandemic, these are sectors that are highly energy intensive. So when you're looking at data servers in the case of digital services and movement of goods in the case of e-commerce, for example. So how can private sector think about efficiencies, say in the energy use? So we're looking at shift to renewable through on-site investments in solar or divert excess energy to the grid, like the way Apple and other companies are starting to do. The use of less energy-intensive servers are also being and other data infrastructure would also be another avenue. And for e-commerce, bringing in efficiencies in transportation systems, looking at green freight and other services, but also reducing global movements of goods, which can increase carbon emissions. Now, sustainability can also be achieved, of course, through innovative material reducing, reusing, recycling products, a circular economy, and incentives for the private sector to produce products that are green and sustainable. So which brings me to the policy dimension. So in Malaysia specifically, Malaysia has been a pioneer in green finance. What is required now is an environment that will actually incentivize the private sector to produce products that are green and sustainable, as well as use production processes that are more environmentally friendly. So under the midterm review of the 11th Malaysia Plan, Malaysia did target the reduction of greenhouse gas emissions against its commitments of 45% under Paris Agreement. Now, in terms of digitization, now digitization and sustainable businesses are closely linked. In terms of industrial development, MITI through the Malaysian Fourth Industrial Revolution policy launched last month advocates the use of technology for environmental purposes, one of them. This resonates with the earlier Malaysia Digital Economy Blueprint that emphasized the need to provide environment for sustainable development at the national level. And now an overarching policy document, which will be the forthcoming 12th Malaysia Plan, should and could provide the overall policy framework towards sustainability goals, wherein you're implementing vehicles for actual policy change could be led by industry. And another vehicle that can really make a shift in this in terms of the policy environment is the use of eco-industrial parks and the framework for it. Now, in eco-industrial park, energy consumption of individual factories can be tracked, monitored, and make them more efficient in terms of energy consumption. When you have an overall environment that incentivizes these green production processes, you're also able to attract investments that are more environmentally sustainable. And thus, in the medium term, you are looking at a private sector that is led by a medium-term agenda of being environmentally more conscious. Thank you.
Excellent. And the eco-industrial parks, it's a subject that is very dear to me, and I think it's an extremely good starting point also to get going with industrial symbiosis and the circular economy as well. So there is a big need for that. Thank you very much, Smita. We move now to the second panelist of today, Mark McKenzie, Senior Analyst at the Southeast Asian Central Bank Center, SEACEN. Mark is a Senior Financial Sector Specialist in Financial Stability and Supervision and Payment and Settlement Systems. He is the subject matter expert on crisis management, recovery and resolution planning, supervision of systemically important financial institutions, and financial integrity. He's also the lead point of contact on matters relating to central bank digital currencies, stable coins, virtual assets, fintech, and cyber risks. Prior to joining the center, Mark frequently served as an independent advisor for example, the International Monetary Fund, IMF, the European Union, and the World Bank on missions to countries, several countries around the world. So welcome, Mark. And the first question to you is the following. How do sustainability and digitalization aid or hinder financial stability? Over to you, Mark.
Thank you very much, Roberto, for your kind introductions. It's certainly a pleasure to be joining this esteemed panel and to speak specifically to the subject of sustainability and digitalization. Certainly, as Smita alluded to, there are two great transformations taking place today. One is on the digital transformation that is certainly taking place in the financial system and in other areas of our economies. And then it's this sudden burst of interest around sustainability and managing the climate change risk. Interestingly, how I'm going to tackle this is to highlight some of the benefits of both, and then try to flag some risk that are emerging around both as well. I think one of the things that we have taken away from a recent speech by Mark Carney is that ever so often we go through these transformations and we're trying to reap certain key benefits, but these benefits will take time to realize. I mean, certainly COVID-19 has accelerated the process of digitization. It has accelerated our interest in sustainability. But yesterday, we completed our Conference for Directors of Payments program at the SEACEN Center. And one point that we discussed, which I think it's relevant to this conversation, is what we're seeing certainly now across Asia and elsewhere around the world is the entrance of new technology, the entrance of new firms, fintech firms, and an evolving ecosystem that is highly fragmented. It is also a segment that is, there is intense demand for new investments. And this intense demand for new investment in itself, while it will propel some of our interest in digitization and sustainability, there's also the risk of crowding out other types of investments. And this could be crowding out of investment relevant to climate risk and sustainability as well. So that's something for us to think about as we tackle this issue. Another area of interest, certainly, is with the digitization that we see that is taking place, is that within the financial sector, banks, we know, for example, now tend to have a little bit better data in terms of what they can use to assess credit, for example. But we have also seen the entrance of the technology firms, the big tech firms, which brings another set of issues because they are now peddling in data. So this now raises questions around issues such as data privacy, competition, etc. So these are issues that we have to consider. So I want to leave on this specific question 5 key points that I think it's relevant as we think about the subject. The first is, as we think about digitization and sustainability, is that financial inclusion through digital identification and the use of big data and artificial intelligence is one area that we can look to. It also is the integration of sustainability into decision making at both the individual and business level as well. And the third point is around using sustainability related data to progressively integrate environmental and social risk into risk management policies at banks. The fourth is around the essential role of digitization in building cross-sectional ecosystems and partnership to connect new technologies and create new business models. And the final point I will leave with is the use of big data is critical in aggregate form as it can be made available to social initiatives addressing the challenges around society. And we have seen this in the area of financial inclusion, which I think Dr. Morgan is so interested in as well.
Thank you very much, Mark. And I can tell you that from our point of observation from the Business Council for Sustainable Development, there is a lot of interest and demand for understanding how to assess and include ESG-related risks into, the enterprise risk management process and into the strategy. So this is happening, not as much as it should, but we can see that the trend is definitely there. Thank you very much, and we move to the last panelist, but definitely not least, Dr. Peter J. Morgan. Let me just tell you a little bit about his biography. Is a senior consulting economist and vice chair for research at the Asia Development Bank Institute, ADBI. Peter has been with the Asia Development Bank Institute since 2008, and he has 23 years experience in the financial sector in Asia, most recently serving in Hong Kong as a chief Asia economist and chief Japan economist for HSBC. Previously, Peter held similar positions at Merrill Lynch, Barclays, Bezos Wed, and Jardine Fleming. Prior to entering the financial industry, Peter was a consultant in energy and environmental analysis. Peter earned his MA and PhD in economics from Yale University. His research interests are in macroeconomic policy and financial sector regulation, reform, financial development, financial inclusion, fintech, financial literacy, and financial education. So welcome, Peter. And let me ask you the first question. We move into a very interesting and fast growing sector, which is fintech. And the first question to you is, how can fintech help to promote sustainable investments? Over to you, Peter.
Thanks very much, Roberto. I'm delighted to participate in this session on this important topic. I think at the very broadest level, fintech or financial technology contributes to financial technology by enabling more and more people to participate in the financial sector. Financial inclusion, I think, is a keystone to broader sustainable digital finance. It enables a large variety of actors, including those of lower income status, to play a more direct role in the financial system, unlocking new sources of sustainable finance and expanding access to sustainable finance products and services, and it increases access both for potential fundraisers and fund investors. And I think all of the major categories of fintech have a potential contribution to green finance and sustainability. For example, if we look at alternative finance, either peer-to-peer lending or equity crowdfunding, donation crowdfunding can unlock new sources of funds for green projects. If you look at the broad category of payment systems, you find some innovative payment systems which are linked with green donations. And of course, there's quite a bit of use of crypto assets or tokens to help make investment projects more fungible. On the investment side, robo-advisors can steer investors toward green investment products. If we look at the insurance side or InsurTech, there are new applications which can help insure against climate-related damages. There's all sorts of uses of smart contracts based on distributed ledger technology and or crypto assets. So those are kind of the general categories. There are also some very interesting specific examples. Let me just cite one. This is being done by Ant Financial Services in China. So they have this ant forest concept, which encourages ants users to reduce their carbon footprint through a three-part approach. It provides individualized carbon savings data to people's smartphones. It connects their virtual identity and status to their earnings of green energy for reduced carbon emissions. And it provides carbon offset rewards through a physical tree planting program. So I think there are many applications, and it's a rapidly growing area. So thanks very much.
Let me just ask you one thing. Do you see, from your point of observation, a different rate or type of adoption of fintech products in Asia or Southeast Asia compared to other regions in the world? And is fintech something that is going to be able to give more access to finance and financial products to people in Asia? So can you comment on this?
Well, I think it's difficult to say. I mean, the rest of the world, of course, is extremely varied. But I think Asia has been perhaps more aggressive in many areas. For example, China has seen very pioneering steps by particularly the big tech firms like Alipay and Tencent to promote financial inclusion, even in rural areas, to promote the development of e-commerce by farmers, for example. Indonesia also has seen very rapid growth, and you have these firms like Gojek, for example. I would say the developments in Asia have been quite proactive.
Excellent, excellent. Thank you very much. Mark, we move now to talk a little bit about governance, which is the G of ESG. And the question to you is the following. How can sustainability and digitalization foster better governance? What are the key challenges and concerns in your view?
Okay, thank you very much, Roberto. I think how I would love to perhaps start tackling this question is certainly to share some of what supervisors and regulators have been doing to capture this climate risk within the banking sector, and then to perhaps share a little bit more on from a governance point of view. I think what we have seen certainly, I think Bank Negara, credits to Bank Negara, they have started to bring and try to capture the climate risk within their supervisory framework. But we have also seen that as well in other areas as well, in Europe as well. However, the challenges is in terms of data and the quality of data that is available. And this is something that I think supervisors are working on. A specific issue around governance that I became aware of quite recently with respect to sustainability and climate change risk is the area of multinational firms and global banks, for example. One key issue here is in the home country, the HQ have made very good pronouncement in terms of their governance, to address climate risk, and they have very good framework in place. Now, what has not happened very well is how this has transferred to subsidiaries, for example, in Asia. Now, there are couple of issues here that we have to think about. And one is, this is a matter that I became aware of quite recently, is what are the rules and regulations and requirements in the home country versus the host country? How aligned are these rules and regulations? And why is it not being transferred to the subsidiaries? So that is something for us to think about. Certainly from a supervisor perspective, another area of interest for us is the use of climate risk stress testing. But stress testing by themselves brings certain challenges as well. And when we add the climate change risk to it, it does not alleviate the challenges as well.
So one key take-home message is basically you are advocating for a harmonization of governance rules across the world so that there is a level playing field between, for example, a headquarter and the subsidiaries of different companies around the world. Yeah.
I would probably agree with you on that, yes.
Okay. Smita, the next question is for you, and we're going to talk about data. How can data be used in financial services to promote sustainability? Please share with us your insight on this.
Thanks very much, Roberto. So both Mark and Peter have alluded to the growth of financial services and digital financial services and fintech. So digital financial platforms are, of course, making it easier for us to access financial services at our fingertips. Now, how do we leverage this to encourage investments into sustainable ventures? So examples would include investment portals or banking platforms that provide emission benefits, making it easy for investors to choose sustainable investments. In terms of using data, the increasing use of environmental data to enhance risk capabilities and assist with adjustments of pricing is one possible use. For example, in banking, technologies such as satellites and intelligent chips will reduce the cost of obtaining environmental data from customers, which in turn would mean that banks would be more accurately able to assess the risk of a customer's lending portfolios. Similarly, enhancing reporting on environmental impacts, including indirect carbon emissions, could make it easier for banks to gather additional data that they will be able and be expected to disclose both risk exposure to environmental and climate change, as well as the environmental impact. And this in turn will affect capital allocation. So what you're seeing is that you're using data, so that will need to be reported in a globally comparable manner with relevant standardized metrics that will underpin both the accounting as well as voluntary disclosures. A third point was in digitization of capital market instruments. Now, right now, only a very small portion of green assets are financed by capital market instruments that are certified as green. Digitizing bond offerings can help bring down the cost of certification and monitoring and reporting environmental data for green bonds. This allows more companies to meet the requirements to issue green bonds. And finally, using data technology to promote traceability in supply chains. This is very important, especially as we're looking at reintegrating into reconfigured global supply chains and global value chains, which are going to become more green and environmentally conscious. So banks can aid the deployment of satellite and blockchain technology to increase auditability and transparency of value chains to verify that products are actually produced sustainably. These data sources will offer banks opportunities in terms of trade finance and instant payments. So that's briefly, yeah. Thanks, Robert.
No, thank you very much. And we definitely see a push for ESG data, and but the question, another very short question I would like to ask you is, do you see that right now sustainability data is reliable? Can you comment a little bit about on the assurance and the reliability of data? And do you see room for improvement there?
I think being globally data that is globally benchmarked is very key, and that is not something that we see that is easily obtainable. So what will be required, as Mark alluded to, is having some framework in place that will make sure that this data is, as you said, reliable, but also able to benchmark, because you're looking at a borderless, you're looking at a lot of cross-flow data that is going to be used for traceability of global supply chains. So not only will it have to be reliable in the national context, but it has to be something that is globally recognized. So there is some ways to go there.
And also need for harmonization of methods
Absolutely.
And standards, I would also add. Excellent. Yes. Thank you very much. Thank you very much for your insight. Dr. Peter, let's go back to Fintech. The next question for you is, what are the risks involved in Fintech products and services, and what can be done to mitigate them?
Yes, well, I think Mark touched on some of the macroeconomic or macro-potential risks, but there are quite a few different kinds of micro risks too. First, the explosion of online platforms, including those for financial services, does raise questions related to the use and protection of consumer data. There's a basic question of who owns a user's digital footprint. Is it the user or the platform? Within this context, we see that big tech firms currently are much less regulated than banks, and that does raise the risks in that area. Also, as the number of devices connected to the internet increases, so will the potential for various kinds of cyber risks, which undermine confidence and financial stability. And these include frauds such as hacking, phishing, and identity theft, as well as possible crashes of systems due to technological vulnerabilities. Concerns are also arising, I think, around the safety, fairness, and trustworthiness of artificial intelligence and machine learning. There's a concern that bias in algorithms could that make increasingly important decisions affecting people's livelihoods, including access to finance, could have serious negative consequences and actually increase exclusion, especially for poor communities, minorities, and women. Crypto assets are still at an early stage of development and have many risks. Trading platforms are subject to hacking and theft of accounts. Password protection is still crude. Systems are private and decentralized, so there's no recourse if transactions fail for various reasons. And crypto assets are also ripe for criminal usage, such as money laundering and ransomware.
So these threats or these challenges regarding crypto assets, do you think they will hinder the development of these new products, or sometimes somehow we will see crypto assets becoming the norm?
Well, the regulatory responses have been quite different in various countries. China, for example, has taken a very hard line, basically not allowing banks to be involved with those kinds of transactions and imposing a lot of restrictions. Otherwise, I think Japan has taken a more neutral attitude, but in general, I would guess that regulation of crypto asset trading is going to increase over time, and that will, of course, tend to perhaps delay the development of various kinds of innovations. But on the other hand, I think they will provide greater confidence in the system in general and for consumers in particular.
Which is extremely important. Excellent. Thank you very much. Smita, back to you with a question related to Malaysia. Let's try to be specific a little bit about the country we are in. What are the financing options for green technology investment in Malaysia? Do you see that growing at a sufficiently high pace?
Thanks, Roberto. So as I mentioned earlier, actually, in terms of green financing, Malaysia is, I would say, a pioneer in many ways, and it's actually at the forefront. There are many initiatives in place. For example, as part of Malaysia Green Technology and Climate Change Center, which is under CASA, there is the National Climate Change Policy and the Green Technology Master Plan. And there, in terms of like financing schemes, they have low-cost schemes to finance green technology, which is backed by government guarantee. There are green technology tax incentives that were introduced in 2014, which will be until 2023, for example. And there are energy audit conditional grants that provide financial assistance to eligible applicants for audits. There is also the green technology initiatives are gaining traction with more businesses leaning towards green solutions. And this is more of also a global trend, right? And if Malaysia wants to, being a very open economy, if Malaysia wants to integrate into global value chains, this is something that it will also have to do at the industry level. So interestingly, actually, MIDA reported that for the year 2020, 900 investment applications were in green technology projects, which is quite significant. So other than the public sector-led initiatives, Malaysia, as I said, is a global leader in green bond financing. In fact, in 2017, the first green sukuk was issued in the world by Malaysia. Yeah. And that said, funding gaps still remain, and there is a need for private sector to come in more. And there are some venture capital funds that are concentrating their efforts on digital and technology-based ventures, and perhaps more emphasis can be put into sustainability-related tech ventures. And this could be a viable source of funding green initiatives going forward.
And what's your opinion, Smita? What can be done to reassure the private sector or push the private sector to be more daring in this type of investments?
I think
is it a policy issue?
Yeah, so absolutely. I think a lot of it is going to be to do with how does the policy environment incentivize the private sector to actually go and make changes to their production processes that are sustainable, that are green, and to produce green products, because this is something that is going to be costly. So, and it needs to be, there needs to be a conducive environment which makes that shift worthwhile for the private sector, which then can go to the financial sector where there are instruments that are available should you go into green ventures.
Thank you very much. Mark, let's talk about the SEACEN for a second. How have the Southeast Asian central banks responded to the sustainability and digitalization, but especially in light of COVID in the recent months? If you can share some insight.
I think I really have to read that bit, and I'll share a little bit about some of our member states. For example, in South Korea, they have taken a number of green initiatives to support the economic recovery after being hit by the pandemic. And in the mid 2020, they announced the Green Deal with approximately $73.4 trillion Korean currency, which is designed to prepare the economy for economic growth after the crisis. Smita has dealt with Malaysia, so another member is Hong Kong. In Hong Kong, the government, along with HKMA and the Securities and Futures Commission, established a Green Sustainable Finance Cross-Agency Steering Group in May 2020, and the steering group is responsible for coordinating the management of climate and environmental risk in the financial sector, accelerating growth of green and sustainable finance in Hong Kong, and supporting climate strategies, the climate strategies of the government. In Singapore, based on the information that I have from our colleagues there, the Monetary Authority of Singapore has taken active measures to promote green and sustainable financing in the finance sector. In June 2020, MAS launched a $1.75 million MAS Global Fintech Innovation Challenge to seek innovation solution to assist financial institutions building their resilience against COVID-19 pandemic and climate change. In Thailand, in the summer last year, the government issued the first sustainable Thai 30 billion instrument. The first 10 billion tranche will be used for green finance, green infrastructure through mass rail transit, Orange Line East, and the remaining 20 billion will be used to finance economic and social impact projects in the country. So these are just a few in terms of what has been taking place in other parts of Southeast Asia.
So there will be a lot of investment, a lot of money channeled to green investments in the coming years, as in the post-COVID recovery, which is excellent news. We have come to the last question, and the last question is for Dr. Peter, and I want to talk a little bit about financial literacy, of which you are a subject matter expert, and the digital financial literacy and the relation between that and the promotion, the push for green fintech. How can this happen? Can you shed some light on the relationship between these two entities?
Yes, well, there are actually three there. Because traditional financial literacy is associated with knowledge of basic financial concepts like compound interest rates, inflation, risk diversification. But digital financial literacy is much more focused on how people can increase their correct understanding of fintech, because as I mentioned, there are all sorts of risks in using fintech, and that if people are not sufficiently aware of those risks, as well as having knowledge of those products and services, then they run the risk of bearing losses, being subject to fraud, that sort of thing. So I think without that knowledge, people are going to tend to lack confidence to use some of these products and services, and therefore I think that the promulgation of digital financial literacy through various means should have a positive impact on people's confidence in those various products and services, and therefore have a greater potential impact on a green finance.
Thank you very much. Thank you, Dr. Peter. So this was the last question, and as a final wrap up, I would like to ask you if for a couple of minutes you want to make some final remarks. Maybe we can start with Smita. Is there anything that you want to add as final remarks?
Nothing to add, but just to basically kind of sum up, to say that, in this wave of digitization, it's a great opportunity to also look at, mainstreaming sustainability into policy making, because this, with fiscal, constraints that governments are going to be facing because of the stimulus packages, growth will increasingly need to be led by the private sector. So how do you make sure that medium to long-term policy is such that it is able to incentivize firms to undertake more green and sustainable ways of producing, as well as actually producing green and sustainable products? As globally firms are getting more environmentally conscious, this is going to be the unique selling point for firms to be able to integrate into global value chains. And this is going to be specifically important for the SMEs that will need to be provided the capacity and the support to be able to mainstream these practices into their policy, into their production processes.
Thank you very much. Mark.
Thank you very much, Roberto. It's certainly a pleasure participating. If I have a parting message, I think both the digital revolution and the sustainable thrust towards sustainability present us with a truly grand opportunity, especially in light of this COVID-19 crisis. It is really an opportunity for us to be more collaborative, more cooperative, more concerning about each other, to build better society, create more opportunities for especially the disadvantages in our society, to really make this world a better place. So that's what I'm inspired by with the digital transformation on the thrust towards sustainability.
And I couldn't agree more. Dr. Peter.
Yes, I think there are many fantastic opportunities developing. For example, a fintech can certainly facilitate the use of things like big data, artificial intelligence for various kinds of roles and projects. At the same time, we know from the history of finance that financial innovation always entails risk. And therefore, there is a need to strike a delicate balance between an environment which promotes innovation, but at the same time tries to minimize at least the more negative kinds of risks, and provides a degree of consumer protection and financial stability.
Okay, thank you very much. So we have asked very big and important questions to prominent speakers. and they have given us a lot of important food for thought and information. I'm very grateful to for having been involved in this panel discussion. And unfortunately, this is all we have time for today. I hope you enjoyed the discussion as much as I have, as much as we did. And stay safe and goodbye. Thank you.
Thank you very much to our panelists and moderator for the synergetic exchange on the varied methods as well as the useful advice as we strive towards a more sustainable future in the digital economy. Now, our next session will dive deep into the realm of artificial intelligence. Join us for an engaging conversation soon.